A high-yield savings account sounds pretty fancy, right? Like it's wearing a tuxedo while your checking account slouches in its sweatpants. But don't be fooled by the name. These accounts aren't about stock market wizardry or risky crypto plays. They literally are just savings accounts, but with better interest rates and slightly more personality. If you've ever let your money nap in a traditional bank account earning 0.6% interest, aka financial sedation, it's time to wake up. High-yield savings accounts are one of the simplest, low-risk ways to actually earn something on your cash while keeping it safe and accessible. They don't make headlines, but they quietly do the work that your money should have been doing all along. It's not flashy, no, but it is functional, and in personal finance, that's what actually wins. But before you go and throw all your dollars in, let's count down the 15 things that you should know about high-yield savings accounts, what they are, how they work, and why they might be one of your smartest passive money moves yet. Welcome to the Smart Money Countdown, where personal finance meets punchy fact-backed breakdowns. Every Tuesday and Thursday, we give you the 15 things that you need to know about what's trending in money, investing, and building real wealth, while on Sundays, we make deep dive videos. Subscribe now if you want to make smarter money moves without spending hours reading through another finance book. Number 15. High yield is relative, not magical. When banks say high yield, they don't mean 12% returns that'll make you rich by next weekend. A high yield savings account usually pays around 4 to 5% APY depending on the bank and the interest rate environment in the US. That is way better than 0.6%, but it's still a savings account, not a miracle worker. This isn't where fortunes are made, it's where cash can sit and earn its keep quietly. If you thought high yield meant yacht money, well, welcome back to reality. It's not gonna fund your early retirement, but it might cover your next overpriced sandwich. Number 14. Traditional banks rarely offer competitive rates. Your big name bank, yes, the one with the football stadium and 1,000 pens on the counter, probably offers garbage rates. I mean, we're talking 0.06%, sometimes 1% if they're feeling generous. Online banks and fintech platforms typically dominate the high-yield space. Why? Lower overhead, fewer branches, and more competition. If your current bank's idea of growth is a free tote bag, well, it's time to look elsewhere. They're great at two things: handing out pens and robbing you of interest. Honestly, your couch cushions could have offered better returns. Number 13. Online banks are your best bet. Most of the top high-yielding savings accounts are with online-only banks. They often pay 10 to 15 times more than traditional banks. For example, if your traditional bank pays 0.06%, an online bank paying around 4.5% is about 75 times higher. But 10 to 15 times is a more simple way to say it. You won't get a lobby, but you will get faster interest growth, slick apps, and fewer surprise fees. It's what happens when tech tries to make banking actually useful. No marble floors, no waiting in line, just your money doing more while you scroll memes. The only thing that they don't offer is a teller asking if you want to open another account that you didn't ask for. Plus, many online banks have user-friendly interfaces that make managing your money feel less like a chore and more like a quick swipe through your favorite app. Number 12. The interest rate is variable, not fixed. Unlike a CD, the rate on a high-yielding savings account can and will change. It moves with the Fed rate and broader economic conditions. So that sweet 4.75% APY you signed up for today, well, it could drop to 3.5% next month. Or rise. Or vanish like your motivation after payday. Don't get attached. It's not a soulmate. It's a financial situationship. One day it's 4.5%. The next, it's ghosting you like a bad Hinge date. But remember, even when rates dip, it's usually better than traditional savings accounts. Just don't expect a fixed paycheck from it. Number 11. Your money is still safe and insured. The phrase online bank freaks some people out. But if the bank is FDIC insured, then your money is protected up to $250,000 per depositor per bank. That means if the bank spontaneously combusts, unlikely but comforting, your savings are still covered. You don't need to bury gold bars in your backyard just to feel secure. FDIC insurance means that your savings are protected, even if your financial confidence isn't. It's basically a security blanket for your cash, minus all the childhood trauma. Also, if you have joint accounts or different ownership categories, FDIC insurance coverage can be higher than $250,000. Number 10. Transfers can take a day or two. Unlike your checking account, your high-yield savings may not offer instant transfers. Moving money in or out might take 1 to 2 business days, especially if it's between 2 different banks. Some banks now offer faster or even instant transfers between accounts at the same institution or via payment services like Zelle, but this isn't universal. The delay, it is annoying, but it also adds a layer of friction that's oddly helpful. You're less likely to blow your savings on midnight purchases or pizza delivery. Sometimes, waiting 24 hours is the only thing standing between you and another "oops, I bought it" moment. It's like the postal service of banking. Slow, sure, but it usually gets there. Consider it a 48 cooling off period for whatever nonsense you almost bought. I mean, this little buffer, it can save your budget more than once. Number 9. There may be withdrawal limits. Some accounts, especially savings accounts under Federal Regulation D, limit you to 6 withdrawals per month. Go beyond that, and you could start facing fees or conversion to a checking account. However, since April of 2020, the Federal Reserve has suspended this Regulation D limit, so many banks no longer enforce the 6 withdrawal rule. Still, some banks may voluntarily keep it in place, but it's not about punishment, it's about stopping you from treating your savings account like your weekend spending jar. You get 6 chances a month to mess up, so use them wisely. If you're treating this like a checking account, you're doing it wrong, and, well, you're probably paying for it. Think of it like a gentle nudge to keep your savings where they belong. Saved. Number 8. No debit card equals less temptation. Now, most high-yield savings accounts don't come with a debit card or ATM access, and that is a good thing. It's savings, not a side hustle for your Starbucks runs. But keeping access slightly inconvenient, it helps you leave your money alone, where it can quietly grow. Accessibility breeds temptation. This setup saves you from yourself. No card means fewer treat-yourself moments, aka sabotage in disguise. It's savings you can't spend instantly. Your willpower finally gets some backup. Sometimes, the best financial tool is a little inconvenience. Note, some banks may offer limited ATM access or linked debit cards, but this is generally rare. Number 7. You can open one in 5 minutes. Most online banks make it ridiculously easy to open an account. No awkward branch visit, no suits, no pens on chains. Just a few clicks, your social security number, and a funding source. Boom. Done. You've spent more time deciding what to watch on Netflix than this will take. That's less time than it takes to microwave your third-day leftovers. If you can order sushi in under 60 seconds, you can definitely do this. Number 6. You'll earn compound interest daily, usually. Now, high-yield savings accounts typically calculate interest daily and deposit it monthly. That means your money earns money, and then that money earns money, and, well, you get the idea. It's not exponential rocket fuel, but it is real growth, and all you had to do was literally nothing. How's that for a win? It is the closest thing to passive income without selling an online course. Your money is doing math while you're binge-watching finance TikToks. Compound interest is the secret sauce of wealth building, quietly working behind the scenes. Hey, if this video is helping so far, please be sure to hit that subscribe button. We break down trending money topics like this every week. It's the easiest financial win you'll make all year. Number 5. It is great for emergency funds. Need to stash 3 to 6 months worth of expenses? Well, a high-yield savings account is ideal. It is safe, it is liquid, and it earns real interest. Unlike a checking account that leaks money slowly, this one actually builds. When disaster hits, having cash on hand beats explaining to Visa why your dog needs surgery. Because when your car battery dies, "I had it in crypto" isn't a helpful response. Emergencies, they don't schedule appointments, and your savings shouldn't either. This is your financial safety net, ready when life throws you a curveball. Number 4. It's not for long-term investing. Okay, let's be clear. A high-yield savings account is not a replacement for investing. You're not going to retire on it. It's the parking lot, not the highway. If you're looking for that long-term growth, well, consider index funds, ETFs, or retirement accounts. This here is about safety and short-term goals. Think of it as your financial waiting room, not the operating table. If you're planning for retirement with this, well, your retirement party might be a funeral. Great for short-term goals, not so great for your beachfront villa dreams. Number 3. There's usually no monthly fee. One of the best features, Most top-tier high-yield accounts come with no monthly fees, no minimum balance, and no hidden nonsense. Now compare that to traditional banks where the free account costs you $12 per month if your balance dares to dip. No fees equals one less financial headache to explain to your future self. Finally, a bank account that doesn't charge you for the crime of being broke. No fees means fewer excuses to curse under your breath at the end of the month. While most online high-yield savings accounts have no minimums or fees, some may require a minimum balance to earn the highest advertised rates, so always check the details. Number 2. Rate shopping is worth it. Not all high-yield savings accounts are created equal. Some offer 4.5%, others 3.85%. Some have great interfaces, others look like they were built in 2008. Don't just go with the first one that you see. Compare the rates, check for the fees, and look for extras like goal-setting tools. A 1% difference may not seem like much, until you realize it's free money. Don't just settle. This isn't high school dating. A few clicks could mean an extra $100 a year. That's like 20 lattes, maybe. It's worth the time to shop around and find the best fit for your money. Number 1. It's one of the easiest money moves you'll ever make. There's no risk, there's no complexity, there's no confusing apps or jargon. Just a simple, powerful tool to grow your savings faster. If you've ever felt like managing money was overwhelming, start here. It's not going to make you rich, but it will make you smarter. It'll get you in the door. It's the gateway drug to responsible financial behavior, and you don't even need a prescription. Set it, forget it, and feel smug about it. You'll wonder why you didn't do it sooner. It's like flossing or switching off autoplay. Do you already have a high-yielding savings account? If yes, where? If not, what's holding you back? Drop your answer down in the comments below. Let's get the conversation started. And well, there it is. That's your breakdown of high-yield savings accounts. Simple, powerful, and finally worth your attention. In a world chasing crypto chaos and meme stocks, here's how the government quietly pays you to do nothing. With treasury bills. Click on the next video on how treasury bills work and how you can benefit from it. It's packed with smart, no-fluff money moves you won't want to miss. And hey, if you found this video helpful, be sure to hit that like button and subscribe for more smart money moves. And share this with someone who's still trying to hustle their way to financial freedom. They need to hear it.